we're going to talk about Tesla stock and progress on the two main catalysts, Robotaxi and Bots. The stock has been on a roller coaster, but as we'll show you, this is something to expect with high growth stocks like Tesla. Tesla stock rose from $213 in October and hit its all-time high, more than doubling 2 months later on December 17th at $479. Today, 2 months from that, it's fallen, losing $100 at $370. But it's important to keep your focus on what will really make the stock jump 2x, 5x, or even 10x. And that's progress on Robotaxi and Bots. Today, we'll review ARK Invest research on Tesla's cost per mile, and it looks like Tesla's looking to fill 68 job openings, all for the Tesla bot ramp. Cern is a chartered financial analyst who's currently running his own investment advisory firm called BrilliantAdvice, providing wealth management services. Thank you, Cern. Appreciate you joining me again.
Hi, Herbert. It's great to be here. These are really interesting topics.
Yeah. So, a lot of people are kind of, Tesla investors are watching the stock rise and then now falling, and, they're getting concerned. And then they're attaching different reasons on why this is. And so I thought it would be good for us to revisit it's kind of like you did this fantastic analysis. We're going to look at some of those slides that you did in December. Great show, talking about that Tesla is actually a very volatile stock. And as long-term investors, of course, what we really care about is Robotaxi and Bots. We've got new information to share on both of those, and that's what we need to keep our eye on. So let's start first with what is happening with Tesla stock right now. This is today. This is a Friday that we're recording this. We'll probably publish this either Saturday morning or Sunday. And you can see that the stock is at $368. And it's the last 5 days, it's basically in this range. I mean, it was around 390s and it's now down to 360, so 370. So it fell a bit. This is the 1 month view. And again, from here, you can see that it seems to have fallen quite a bit in the last month. And then this is the 6 month view. And then this is where the point I was making, which is it was really around the 200 mark. And in a matter of months, in December, it jumped to the all-time high, 479, and now it's to 368. Any comments on the kind of the volatility that we've seen here?
The volatility that we're seeing is perfectly normal and should be expected. I know that every investor would love to see the stocks they hold go up every single day, but the world doesn't work that way. And it's not unique to Tesla, but the behavior of stock prices that suddenly move upwards in a very rapid ascent for a short period of time and then mark time for longer periods of time, that is perfectly consistent with high growth companies, whether it be Tesla, Nvidia, or back in the day, stocks like Microsoft and Amazon and Apple. They all have had periods like that. So it's just hard, and particularly during a time when I think emotions are running a little bit high for some people regarding what's going on politically. Investors don't make good decisions when they're behaving in an emotional fashion. And the challenge that we have is every day there's a different narrative about different things, right? As we discussed yesterday on Cyber Bulls, there's posts going around saying that Tesla sales in Germany are dropping because of Elon's political statements. Well, in reality, you should never look at 1 month's deliveries for any company, let alone Tesla. And there's certainly explanations as to why that's the case beyond this one thing. So the stock reflects all that, and you should expect after a big run up that there's probably going to be some profit taking for a while. I think that's
Yeah.
perfectly normal.
So I brought back the slides that you spent a great presentation in December. Folks, if you want to watch that, really understand how Tesla stock moves, how it compares to other companies like Apple and Nvidia. This is a show that we did in December 22nd. You should check that out with Cern. But I brought up some of the key slides here, so maybe you can just very quickly highlight some of the key points here. Not the deep dive, but at least, just remind people what you were saying back then.
Yeah. So in this first chart, again, any investor that's been with Tesla for more than a few years knows this very well, and this has happened a couple of times. But often people will refer to the stock as being dead money, basically meaning that if you bought it at some point in time, the stock has not, produced a positive return for a long period of time. In this case, it was 779 trading days
Mm.
from the prior peak to the new peak back in December. So Again, that's just a normal thing. There was another period before this and another period before that, and it also happens with other companies. That is just the way that stocks trade. It's not an indictment on Elon or the company or anything to do with Tesla specifically. It's just the way it is. This is an interesting chart to think about. This chart shows drawdowns. So every time the stock hits a new high, it's the top of this chart. And then the red lines measure the drop from that new high down below that. And you can see that very few times does the stock hit that top line, i.e.,
Mhm.
very few times does it make new highs. It doesn't spend much of its time making new highs. The stock spends most of its time consolidating that and going down and then
Yeah.
recovering it and going back up and hitting that top line again.
Mhm.
It's not like the stock is hitting a new high day after day after day after day when it hits new highs. It makes it fairly quickly and then will come back down and sometimes turns around and makes a new high again. There's certainly been periods like that. But this last one, you know, barely registers on the chart. Now it's a little hard to see here. If I ran these numbers today, you'd see some more red on the right side. But it's just the way it works, and yet the stock has done phenomenally well over a longer period of time.
Yeah. If I looked at this chart and I'm going, okay, it just constantly just drops. Why would I invest in this stock? But actually, from 2010 to 2024, what is it, 1,700% or something like that? It's just ridiculous
Yeah, it's an
returns
average of was it 47 or 45% per year throughout this
growth.
the whole trading period. Sorry, 47.3% per year.
Hmm.
You would not know it by looking at that previous chart.
Hmm.
And you wouldn't know it by looking at this chart, which is taking a look at the daily stock returns over 3,643 trading days since Tesla's IPO. You can see it looks pretty symmetrical. There's almost just as many down days as there are up days. And yet, this is the data for a company that's averaged 47% per year since its IPO.
Yeah. Which means that half the time it falls, half the time it goes up. But in more than half the time, it actually does go up. And when it does, it goes up big. Right. So
That's right.
that's the key thing is like, don't get discouraged when you see the stock falling. And then don't get too excited if it goes up. But like I think you'll point out, there's 41 days that if you held it in those 41 days, that's when you really see the major jumps in stock price
Yeah, and I
appreciation.
think the tendency is for people to try to figure out when those 41 days will be. And of course, there are often surprises.
Yeah.
Right. So this is just a chart that shows the growth of $100, or you could put $1,000 or $10,000, but $100 grew to 27,386 at the point
Jesus.
that we did these
Yeah.
numbers.
That's unbelievable returns.
All right. But most of
Yeah.
the time, the stock was flat or down. And you can see that all the gains were made very quickly. And again, this is not unique. This is not a unique situation to Tesla. There's this 47.3% annual return for 14 and a half years.
It's a pretty good
Some might be
investment.
tempted to
Yeah.
say, well, okay, I will buy the stock when it's below that yellow line
Hmm.
and I'll sell it when it goes above. Well, that may not be a very good strategy either, because when it goes below the line, it can stay there for a while. So you're not really avoiding any discomfort by doing that. And when it crosses the line, it can go way above that line for a while. So you might be missing out on a lot of gains there. So just a naive trading strategy of trading around that probably won't work.
And whether or not you know what's going to happen. Yeah.
Right. And what's to say that 47.3% return per year is the magic number? Maybe it's more, maybe it's less. This is just the breakdown of the trading ranges on a daily basis. So there were 51 days since the IPO where the stock delivered a return greater than 10%.
Hmm.
If you missed any of those days, you made no money. Or if you missed 41 of those days, you made no money in the stock.
Hmm.
You needed to be in it for the top 41 days. And they were often associated with earnings surprises or, financial announcement, not product announcements. Most of these came after earnings calls. Not all of them, but most of them did.
Hmm.
So unless you can predict precisely what the company is going to report or what management is going to say on those calls, it's going to be pretty tough to guess the direction of the stock.
I like this chart because it shows you, right, that uh, well, I guess it looks like it almost half the time, right? 1,000 of the days it just went up to 2%, and about 1,000%, 100 the days it fell to 2%, and then up to 4% drop or increase, or up to 4% drop.
Yeah.
Kind of that's the vast majority. And then there are these rare occasions when it really significant.
It's interesting. For each of the positive categories, the numbers
Hmm.
are slightly more frequent than each of the negative categories,
Right. Yeah, that's right.
right? So from 4 to 6%, there were 203 trading days.
Yeah.
From -6 to -4%, there were 186 trading days.
Yeah.
Now,
But
of course, there's
theoretically, yeah, you should be actually be over time, you should be happy. But actually you just remember the down days.
right. And the funny thing too about percentages is that if the stock drops 50%, you
Mm.
need 100% gain to get back to where you were.
Yeah.
Right, so that also skews this a little bit too. It's a positive 4% is not equal to a negative 4%. The negative has a bigger impact.
Okay.
So, yes, you would expect there to be a positive skew in those numbers, and there is.
Hmm.
This is just the visual of the top, I forget how many are here, I guess 100 best days, in Tesla's history. The best day came all the way back in May 9th, 2013, 24.4% return.
Hmm. Yeah.
But those red bars were ones from last year, and there were 6 of Tesla's best 100 days came last year.
Yep. And it all came in the last 3 months, right? The last
That's right.
couple months of the year too. It's just like all just boom, 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 boom.
Certainly, the top 3 there on the left were those 3 most leftmost red bars were from the
Hmm.
fourth quarter. Yep. And then on the worst days, a similar thing. Um, the worst day was when the S&P declined to add Tesla to the index,
Yeah.
and it was added 3 months later. So all that, all that negative trading around that was really for naught because it was rectified 3 months later.
Okay.
Here's
This is
where
the one.
the best
Yeah.
41 days is all you would have needed in Tesla stock to get
Hmm.
all of the gains since Tesla's IPO.
This is the shocking. This is
Yeah,
absolutely shocking. If
yeah,
you were holding the stock during these 41 best days, or precisely if you, yeah, then you would have gotten the jump from $100 all the way to
yeah.
$27,838. But if you were trying to trade and you're going, oh, I'm going to get out, I'm going to get in, I'm going to get out, I'm going to get in, that's where you might miss some of the big days and then didn't work for you.
Yeah, and this is a critical message because, trading can be fruitful, trading can look great, but if you happen to miss one or more of these days, your long-term returns could be materially harmed.
It's
It's a
crazy.
very difficult thing to guess when a company is
Mhm.
going to have one of its best trading days. Yeah.
Okay. Yeah. That's fantastic, Cern. I mean, I appreciate you going through that. I just, again, we repeated this a little bit from what we did last couple months ago, but that's because, right, you wanted to remind people that if you're, tell them what you're thinking about that, a long term investor versus a trader.
Well, it takes a while for companies to produce results, right? And most of the time, I mean, the fact that stocks trade, almost on a daily basis, we do get, weekend as a break. We all, just because the stocks trade, we all sort of hope and expect that they'll go up every day, and of course, that's just
Mhm.
not possible. The company, it takes longer than on using a daily metric to track the progress of any company, right? And we can see for Tesla this quarter with the introduction of the refreshed Model Y, auto deliveries this quarter are probably going to be pretty terrible, and yet that's okay. The company is making some great progress on that front. And so, as an investor, you have to make sure you're looking beyond the daily, weekly, even quarterly, sometimes even annual results. It takes longer time periods to measure true progress. Now,
Mhm.
we can look for clues along the way, but mixed up in all those clues is a lot of negatives as well for any company, not just Tesla. Now, Tesla happens to be more amplified, right? Because Elon is in the news every day about 1,000 different things.
Mhm.
And he's creating his own news and he's posting on X and he's saying what he wants to say about everything. And so there's this whole sort of whirlwind around him that creates a lot of emotion in the behavior of investors and traders. But yet successful investors I think are able to sort of tune some of that out or focus on what really is important. And that really is the true fundamental progress of the company. It's a hard thing to do, right? Particularly when something that's going on is affecting you personally or your family or people in your country. It's hard. It's really hard.
Yeah, and for me, it's like I have to remind people who invest in Tesla that do you know what this company is, what you're investing in? If you're looking for a mature company, I don't know what the name of one, let's say Coca Cola. Coca Cola doesn't really do a lot of innovation. They might buy new brands, and that's where you might see a pop in terms of the jump. But normally, it's about market share growth. It's about partnership with distribution channels, and you got a great product, and great margins. You can basically see it go up and down 2, 5, 10%, but it's not going to make massive swings. That's a mature company. If you're putting your money on Tesla, this is a bet on an innovation. And innovations don't come monthly. They come, maybe once in a year, or in some cases once in 5 years.
Mhm.
But when they do come, the bet you're making is that it's going to be a 5x, not a 10% growth. That's what you're hoping for. New markets. So for Tesla, right, the two that are about to come that we can visually see, and we're waiting for is finally coming. Like we're actually really close now. It's Robotaxi and Bots. So let's talk Robotaxi. In earnings call, Elon said that we're now going to launch the commercial paid Robotaxi programs in Austin in June. But then he said, "Oh, it's going to be dip my toe, dip our toe, dip a toe. We just want to test to see, but it's going to be all Tesla-owned cars. Very few. I don't imagine it's going to be hundreds of thousands. It's going to be maybe less than 1,000, maybe even 100, just to test everything." So in one way, we're seeing FSD being going to be solved. We see that. We're very confident that maybe this year, next year. But then in a way, this is slowed down. Does this change anything with your financials of what you expected the stock to do based on what you're expecting the earnings to be based on Robotaxi rollout? Did it change that?
Yes and no. So the timeline for when Robotaxi rolls out and when it produces revenue certainly impacts quarterly results in the near term.
Hmm.
So any movement forward or backwards changes those numbers on a quarterly basis. And if you are an analyst that cares about quarterly results, then yes, it would impact your valuation of the company. On the other hand, I'm looking at the present value of Tesla's entire cash flow stream over the next 20, 30, 40 years.
Mm.
And so in that present value calculation, the fact that you might have one number that starts out really small that's in this quarter versus next quarter or even a quarter late doesn't really matter to the whole present value calculation because those future cash flows are so
So
much
big.
larger.
Yeah.
And even discounting them back to the present, which shrinks their value materially, those future cash flows are still materially larger than the near term ones.
Yeah.
So, in my opinion, the value of the company is directionally driven by whether or not they're on track to deliver this. And it doesn't really matter for me whether it's the second quarter, or third quarter, or the fourth quarter of this year.
Yeah.
It's progress towards that, showing us that they're on track for those higher future cash flows at some point in the future. That's really what matters to me,
Mhm.
right? And when you look at the economics of robotaxi business, they're pretty staggering. The opportunity is staggering to dramatically lower the transportation costs and massively expand the transportation market. That's what we're talking about.
Yeah. It's massive. Okay, so I thank you for explaining that. Right, it's like you're inventing something new, and if this invention actually happens, it's such a disruption, such a massive market that it'd be nice if they did it this quarter. But if it's like a year late, 2 years late, okay. But if it's the question is whether or not it's going to happen or not going to happen. That's what you're betting on. Is the invention going to happen or not? Um,
Yeah. Does
so
anybody remember when Amazon started to report AWS revenues?
right, it's
Was
like
it
a
really
year late.
material? I mean, it might have been
Mm.
material, in that year or whatever that they started that. Actually, most people I think didn't even notice. They were so worried
Yeah.
about what Amazon was doing for the book business that they failed to recognize what Amazon was really doing. And
Mhm.
I think this actually is a fairly similar situation. Tesla has an existing business where there are some fits and starts with that business. There's some tremendous challenges in selling autos around the world for all kinds of different reasons. and yet they're trying to build something entirely new that people are not really focusing on too much. Now that will
Okay.
change. That will change over time as the revenues start to flow.
Let's take a look at what ARK Invest dropped this week. And I haven't had your opinion on it yet. So this is Tesla cost per mile, they say, is 30 to 40% lower than Waymo's. And they're looking at Robotaxi incremental cost per mile. They're comparing Waymo versus Tesla. And then they've got two comparisons. This is an early launch comparison of Waymo 5th gen versus Tesla's Model 3. And then this is the 6th gen versus Cybercab at scale. And the difference is that in early launch, it means that you still have one remote operator for every 10 cars. You're just kind of testing things. But once you get to at scale, they're assuming that at that point you have one remote operator for 100 cars. Um, so when you saw this and the way they broke it down in terms of all the costs and how they compared each other, what was your analysis? How does this compare to your analysis?
This analysis actually is very consistent with what I've done and others. James Dalma, for example, I think one of the numbers I saw from him was a cost per mile of about 28 cents.
Hmm.
Now, I'm not sure at what point he was looking at, but the numbers that I ran have my cost per mile, depending on what scenarios we're looking at around 29 cents down to about 22 cents.
Hmm. That's
So,
Cybercab. Hmm.
yeah, yeah. So for ARK Invest to be at 25 cents per mile, I think it's right in the
Hmm.
ballpark. I think AJ as well is in a similar range. So I think we've all kind of come to about the same point. Now we might quibble a little bit about how much parking is and maintenance and tires and that kind of stuff, but I think they're all directionally in the same place. And this is so key to the thesis here is you drive down the cost per mile and you suddenly have something that competes against vehicle ownership, and you have something that competes against public transportation, you have something that competes against the existing rideshare providers. Actually destroys them. It doesn't compete against them, it destroys them. Now I think the chart on the right also is really interesting to think about in terms of the number of vehicles per $5 billion in capex is one way to look at this. And they're saying with Waymo, you know, for that kind of capital, you're looking at less than 100,000 vehicles. Whereas for Tesla's Cybercab, you're looking at a number that's over 300,000. So this is all going to be about cost at scale. And it appears that Tesla has everybody beat on a number of different levels, the operational cost per mile, as well as the cost per vehicle. And Tesla is very focused on driving that down. Now, it's also interesting to think about, people are focused on how much is this going to cost the consumer to ride in a cybercab. And it's clear from these numbers on this slide that it's going to be a pretty reasonable number. But eventually, and I've speculated that eventually it may be free. And the reason is that there's other revenue generating possibilities with robotaxis besides just the fare
Yeah.
that the customer pays. So we may be on a true the change that's coming to transportation, I think, could be profound. Now, free rides in a robotaxi won't happen anytime soon. I'm just saying at some point in the future, as we're able to scale on additional services to a robotaxi network, the cost to the consumer may be free. It's a bit
Wow.
like email today. Do you pay for email, Herbert?
No,
Yeah,
used to be. Yeah.
it may well
No,
be the case with this
yeah.
as well.
Yeah. So a couple of points here for if you spend $5 billion to build a factory to build cars, Tesla's you'll make about 325,000 carbon caps because they built it to be very, very low cost. In fact, another slide said that they actually think that it'll cost Tesla less than 50 or priced will be built to price a Cybercab at 20 or $15,000.
Yeah.
$15,000 because it's purpose built for low cost per mile robotaxi. No one else has one that we know of. Zoox has one and a couple others, but not at this scale. Now, Waymo, they need to pay a company. In this case, they're choosing, let's say, Hyundai. They could pay Jaguar. They could pay Zeekr.
Mhm.
But that company needs to make revenue and margin. And guess what? They can't even make an EV today at profitable. And then they need to create hundreds of thousands or a million of these cars. Why would they do that if they don't get a margin, a profit margin? And then Waymo, So what do you think about the breakdown between Waymo, Cybercab? Or I thought this was way too conservative in that they think that Tesla's cost per mile is only 30 to 40% lower than Waymo's. Because take a look at Waymo, I don't think they give enough for operation support if that's where the remote operators are. they're assuming that the remote operators for Waymo will be 1 in 100 as well.
Yeah.
But they can only possibly do that in like a grid city. They can't do that anywhere else outside of grid city, 1 in 100. So,
Yeah, no, I think that's a good point. And in my view, I think they're giving Waymo the benefit of the doubt there in terms of, the scalability of what they're doing. I still think that needs to be, proven out. And of course, the skeptics on FSD say the same thing about FSD in terms of whether FSD can be, applied in every city and every country in the world. And I think the answer is yes, but it will take time. And I suppose the question is, can Tesla do that faster than Waymo's approach, going city by city?
mhm.
So I think ARC is giving Waymo the benefit of the doubt here initially. But I think
So
I think it's
yeah,
reasonable to think that there will be a competitor here to Tesla. It may
yeah,
be Waymo, and if it is, their costs may be lower than what we think right now, but they're still likely to be quite a bit higher than Tesla's.
yeah.
This is
And
a at scale business. This is where the winner will emerge once
yeah,
we start getting to scale. In the early days, there could be several companies and they could all do okay, right? But eventually it's going to come down to who has the lowest costs at scale, as
yeah,
well
and
as the other additional revenue opportunities that allow them
right.
to even make it more attractive for consumers.
Yeah. I was going to say that at scale is so critical, right?
Yeah.
Because you can do like Waymo has what, let's call them 1,000 cars today in 7 cities. Tesla comes in and they match it 1,000 cars in one city, let's say. And then all of a sudden they do 1 million cars, you know, in the US. Now, with that million cars, you're creating a network, just like what Uber was able to do. And they kind of like, they became, and the more you have, the more you service, the more you can then lower your cost. Simple as that. And then, of course, because their cost per mile is lower, even if it was 30, they're right here, 30 to 45% lower, then you can price lower. And then this becomes a price war.
Yeah.
At one point, can they survive a long, elongated price war? Waymo will continue to lose money if if Tesla Cybercab decides to, um, yeah, charge as low as they want to.
That's right. In the end, the consumer will benefit immensely from this. And again, it's at scale is what matters, and these companies' ability to layer on additional revenue opportunities.
That's that's a really big point now that you said that. That's making me think now. Because if you can, even if they are exactly the same, whoever can go scale first, you can implement a entertainment package,
Yeah,
and then you get paid that $2 per month. Well, that $2 per month is enough to lower your price, like you said, to eventually get down to zero. Because we're talking about here 25 cents per mile here. It's like ridiculously low already. Yeah.
yeah, and it might even be just like a membership thing, like we have with Costco or Amazon Prime,
Right.
right? Those types of things. It might be
Yeah.
delivery services, right? These one of the big things with Robotaxi Network is the utilization of the vehicles.
Hmm.
If you look at any single vehicle, you want it utilized as much as possible to maximize the value of that vehicle. But if you look at it from a network perspective, you want to build in some slack so that when you go to call a robotaxi, there's one around the corner from you. And that means you want to have a lot of vehicles that aren't highly utilized. Therefore, you're able to maximize the value of the entire network and provide the best experience to the consumer. But those vehicles then that aren't being used for rides, that are just sitting there, can they be used for something else in the meantime?
Yeah, they're called deadhead miles, right? These are
Yeah,
miles where the car is not being used. I think you're another great point, Cern. So on the earnings call, Elon talked about using the Cybercab for delivery of products.
yeah,
And that is one of the reasons why they made the back have so much room. You can put in, two bikes and lots of room there. You can put in lots of packages.
that's right.
So then at nighttime, when there's very few, much lowered passenger rides, then they can use it for delivery. Let's say Waymo won't be able to do that with a Jaguar I-Pace. They won't be able to do that with a Hyundai Ioniq. Um, and so then Tesla is able to then utilize their again just lowered cost per vehicle, and they can have more vehicles out there to be able to hit that network. That's a
Yeah,
great
and it's
point.
even possible at some point in a highly optimized system that while, you're riding in the vehicle going from A to B, that on the way you're past point C where the car picks up a package and it delivers it to point D, which is on the way anyway. So there's opportunities to double up on revenue.
Yeah,
Now,
Uber has that feature, don't they? They say that if you pick this level of ride, if you're okay with us picking up another passenger,
yeah.
your price goes down. So they can ask the passenger, "Are you okay with us picking up a package?" And you say yes, your price goes down, and then you go and pick up a package. Yeah,
Yeah, and they might say, it's going to add 3 minutes to your ride. Are you okay with that? It's going to add 10
yeah.
minutes to your ride. Are you okay with that? We'll give you the ride for free if it adds 15 minutes to your ride. Right? There's those kinds of decisions that could be made at some point.
Pretty cool. All
Yeah.
right, so this is another slide from ARK Invest. So they say autonomous ride hail. This is human ride hail here. This is human. This is Uber and Lyft, and they're comparing against Robotaxi cost per mile. And
Mhm.
one thing that people just need to continue to remind themselves is that this is a different scale. On the left side, it's $2. Here's 25 cents. So even though these two purple look about the same size, this is what Uber takes. Uber takes from $2 to $1.04. It looks like they're taking 60 cents per mile. It goes to them because it costs you $2 per mile, by the way. And sometimes it means, yeah, it'll cost me $3 a mile, even higher, um, to get to the airport and back. But let's say it's $2 a mile, Uber takes 60 cents. Here they're saying that a robo-taxi platform would only take 10 cents, 10 cents versus 60 cents. And then you take a look at the booking fee again. And this is like, and then the fuel, I really don't agree with this fuel. Look at this fuel here, is only looks like 10 cents a mile
Mm.
versus this fuel looks like it's 2 cents a mile or 3 cents a mile. I guess
Yeah,
so.
it's too bad the scales are not the same. It would make it easier to compare.
Mhm.
It's a little confusing the way they presented it there, but yeah, I mean, obviously there's a significant difference in the cost structure, massive.
$2 to 25 cents,
Yeah.
that is a 10% of, so if it costs me $50 to get from my house to the airport using a Uber, if I chose to use a robo-taxi, it would only cost me $5. So you tell me, will I choose a robo-taxi for $5? If I feel safe, I would.
Yeah. And then, of course, in big cities where the cost of parking is high,
Mm,
or just the hassle of parking, you're parking in a underground garage that takes you 5 or 10 minutes to get in and out of,
mhm.
or fighting for a parking space somewhere. A lot of people are going to opt out of vehicle ownership once the network gets to a point where it's large enough and reliable enough. Yeah, it's going to be interesting, and I'm excited to see the rollout in Austin. And of course, it won't be perfect. There'll be some fits and starts. There'll be things I need to work on. But keep in mind that when you first see it, it'll be the worst it will ever be. It will only get better from that point on.
Yeah. So I was positioning this show right as stock is going up and down, but what matters is we're watching Robotaxi. And for me, you have to open up your eyes to not just, obviously the most important thing is FSD. Is this going to be as safe as any human? Is Robotaxi even a real thing? Now we know that Waymo's already out there and they're doing some rides and they're, it's working and people are paying them and it's happening. So this idea that Robotaxi will not happen is kind of a little bit more far fetched now than it ever was. So do you believe Tesla will be able to do that? That's great. The other thing is, can they actually offer a full service? And this is where they're dropping you videos of automated cleaning. They're dropping you videos of wireless charging. They're
Mhm.
showing you the app, how the app works. They've got patents now on the app and how third parties, fleet managers. So when June comes, that's when you see the whole thing come together. And that's when you'll realize I just can't see how other companies, and if they want to do this, it's not just, you know, Waymo. Waymo's like, oh, they're doing it. They're not, because at scale, they need to figure out the cost for cleaning.
Mhm.
And are they going to have humans to clean it? Are they going to have how are they going to do it? They haven't shown you yet. So so
The pieces are there for those that look, and it may become more obvious when the network is rolled out in June, or it may not be yet. It may still take a little bit of time after that. But make no mistake, all the pieces that Tesla needs are being put together.
okay, that's Robotaxi. Let's talk bots. That's the other big thing that's happening. And you and I, who have been following bots so closely since last year, um, and if as I kind of laugh a little bit because in January of last year, so about a year ago, right now it's February, right? And whenever we would do a show with Scott Walter, we would do shows, the kind of feedback we get from pretty well the audience was, bots are impossible. You guys are dreaming, not going to happen. From January to June, we just kept getting bot progress from lots of companies. And now, and not only on the hardware, but also on the AI training. And then we kept getting these AI breakthroughs. And at this point, even the vast majority of experts, but even the casual viewer, they're now realizing, yeah, bots are real, bots are happening. Now we're hearing Tesla, and Tesla's, they delayed their bot to production design one. They wanted to have better hands. Okay, now we're hearing, it sounds like, again, we have to have proof that production design one is actually going to go into production this year. Elon said at the earnings call, 10,000 bots. Maybe we won't get there. Maybe we'll have 1,000 bots this year. And then we have ambitions. But one of the signals that we're waiting for happened a couple of days ago, which is these hirings. And if a company is actually going to hire these job openings at this numbers, maybe it is kind of more true than not that they're actually creating a factory and they're creating these factory workers. There's just 68 job openings in 5 locations. Thank you, Cern, for putting this all together. And here's some of them. You can see that they're all Tesla bot associated jobs, engineers, software engineers, technicians, actuator integration. So there's a mixture between engineers as well as these teleoperations and training and software, but also even like factory workers, build and release managers. What's your thoughts on this list that you have here?
Yeah, it's an interesting list. Lots of different jobs and different roles and different locations, right? There's 5 different locations. There's Fremont, there's Palo Alto, there's Nevada, there's some jobs in Austin. And by the way, there were 2 additional jobs that I missed when I wrote that post that are in Athens, Greece.
Mm. Hmm.
So it's not just in the US.
Mm-hmm.
But yeah, if you were not going to make humanoid bots, then it would be pretty foolish to hire 70 people, right? Now, I don't see Tesla as being foolish financially. Actually, if anything, they're very, very conservative and careful about how they spend money. So this obviously is a very clear sign that they intend to begin this manufacturing process. Now, the question is, are they on track? And again, this is back to our question about Robotaxi.
Mm-hmm.
Is it a second quarter thing? Is it a third quarter thing? Is it fourth quarter? Or could it be Q1 next year? Sure,
Mm-hmm.
could be any of those. Things that can happen along the way that take them off track for any number of reasons. Whether it's the supplier network is just not quite ready, or something about the AI and the bot isn't quite working the way they want it to. Combination of all that stuff can be at play here, but the fact remains as you look at these breadcrumbs and Tesla's heading in a clear direction. The other thing I think that's worth keeping in mind, and this also relates to FSD, people said not that long ago, even last year, where, oh, it's going to take years for FSD to become as safe as a human.
Mm-hmm.
And now, suddenly, a year later, a lot of people are saying it's there or it will be there very soon.
Mm-hmm.
And from our personal experience in driving vehicles with FSD, we're seeing that improvement. But I think it bears repeating that humans are terrible at understanding exponential curves.
Yeah.
Even when we are living it ourselves and experiencing it for ourselves, we still don't get what exponentiality looks like and feels like. And an exponential curve is like this. If this is human level, you start out here and it doubles and it doubles and it doubles, and it's still so far away from human level.
Mm-hmm.
And then all of a sudden, it's this.
Yeah.
And we're in exactly the same place with the bots. We see all these bot videos, and everybody remarks about how clunky they are and how, oh my gosh, it's going to take 10 years before the bot can get to where a human is. You know what? A year from now, it'll probably be there. This was a project with some students at Carnegie Mellon University and NVIDIA, and they were trying to emulate some of the various sports superstars in the way they celebrate. Kobe Bryant, LeBron James, Cristiano Ronaldo. Um, And you look at these bots and you say, okay, I can kind of see it, but they're still pretty clunky. But you know what? I bet you they're not in a year from now. They'll probably be just as fluid and just as amazing as those athletes that they're trying to emulate. And a couple of these robots, fried themselves. The equipment couldn't handle the strain of this, right? And so it's very easy at this point to be very critical of where they're at with humanoids and say, oh, not in my lifetime. This is never going to happen. You're not thinking about the exponential curve, right? And that's the curve that we're on with all this technology: FSD, Robotaxi, and the bots. So a year from now, if Tesla's making the first, production version 1 and maybe onto the second, these bots are going to be so much more capable. And I think the fact that Tesla's starting this production is a sign that that's where they feel that these bots are going to be, that they'll truly be useful in the manufacturing process in terms of deploying these in factories and warehouses and so on. So I'm really excited about this. I'm not too concerned about when the revenue starts to flow with the bots. We're still in the development phase, but the fact that Tesla will be able to deploy these themselves in their own
Mhm,
factories and with
mhm.
their own suppliers, that is an amazing testing ground because they're going to be, they don't have to convince a customer to buy the bot and try it out and deal with the risks associated with that. They can do all that internally. So that's a tremendous advantage for them over any of the other bot makers.
Yes, a couple comments. One is on the exponential curve. People have very short memories. Like a year ago, like they would go, right? Like we were saying, never, 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 never. And then 8 months later, they'll change their mind and they'll go, okay, yeah, I can see it, maybe coming in 5, 10 years, but they'll forget that they said never, never, never just 9 months ago or a
Yep.
year ago, just 1 year ago. This is what you were
Yep.
saying, just 1 year. Now, things are going to exponentially improve so that it's not inconceivable that in 6 months, I think we had Sam Altman say that right now AI is progressing at the rate of 1 year every year is equivalent to 10 years. All the
Mhm.
progress that was done in the last 10 years is happening each year. So then, so he also even said at the month level. So that's that first step. And the second thing I wanted to ask you was I've been saying this personally, my own personal opinion about what's going to happen to the stock. And I want to see your opinion on that. So I believe that actually it's the bot that's going to make the stock rise before Robotaxi. And the reason is Robotaxi is being launched in June. Everybody says it's all about FSD right now, and we're seeing the progress. And then you've got Tesla launching it in June. But then he also said, right, it's going to be a dip toe, dip toe, dip toe. It's going to be one city, one city, one city. When do you think that the general investor public and big whales will go, oh, Tesla solved this. I'm going to throw in more money now. I'm going to make the stock go up. I want to be invested in this company. I actually think that it's going to be slow because, hey, Waymo's already doing 7 cities and my wife doesn't know that they're doing it. It's got to be in big numbers. It's got to be in multiple cities. It's got to start generating significant revenue. I think that bots, by the end of this year, if there's even just 1,000 bots working in Tesla's
Mhm.
factory, and even if it's just a video, and I know that we've got video drops all the time, and these videos, but nothing happens. Nobody still thinks, yeah, that's cool. That's amazing. They're coming, but there's nobody's like going to go, I'm going to invest necessarily, right? Skeptical. But if you see 1,000 bots in a factory doing all useful work, like I'm just saying, 1,000 bots. Stop and think about that. 2,000 bots. This isn't onesie twosies. This is like an entire gymnasium full of all these bots doing various different kind of tasks all at the same time autonomously. It doesn't matter for me that I think that people will go, wait until they sell to a customer. Then you show me a price point. Then you show me the revenue stream. I think with bots, this one could actually surpass that. And they'll go, oh my God, I can see it.
I
So,
think you make a good point, Herbert. With vehicles, with Robotaxi, it still looks like a car.
yeah,
And you may or may not notice that there's no one driving it,
right.
right? It still looks like a car, so it's normal. With a bot, no one's ever seen these things in the wild before, right? We may have seen some videos and some CGI videos of bots walking with people in a shopping mall or something, but no one's ever interacted or seen a fleet of bots before. And I think that is a bit of a wake up moment for people. In terms of what moves the stock, I
Yeah.
mean, the conservative answer with that is, well, analysts won't be able to ignore revenue and profit. Now, clearly, I think the stock will react well in advance of material revenue and profit coming in for either Robotaxi or bots. Now, the question is which one could have a faster ramp? And Elon has certainly talked about turning on the entire fleet for Robotaxi. And that may be an aspirational dream of his. In reality, is that possible? I don't know.
Yeah. It's going to be city by city.
Yeah. If we get a national, sort of standard or law in place that allows Tesla to do that
Mhm.
nationally, then maybe.
Mhm.
But absent that, it's going to be a little bit more of a staged rollout, I think. Whereas the bot, I'm not aware
Mhm.
of any issues stopping Tesla from deploying that in factories. Now, they certainly have to
Okay.
keep them safe, keep workers safe from any robotic machine. So the bots might be segregated in some way in a factory. Well, fine, but that doesn't stop any company from using them.
Mhm.
So the deployment of bots could be a lot faster, and certainly the production ramp, as we talked about last week, could be a lot faster for bots than any of us are giving it credit for right now. Right, and I think I've been in error on that too. I think I've underestimated how quickly Tesla can actually ramp these. So I
Mhm.
think you could be right. Yeah.
Yeah.
And
Yeah.
ultimately, as I've said before, bots are what matter to Tesla. Robotaxi is important, but bots are the true value driver for Tesla over the next 10, 15, 20 years.
Yeah. I've coined a new term, Cern. New term is, you know how we refer to robotaxi and we refer to robotics?
Mhm.
And my new term is robot AI. Take out the X.
Yeah.
They're both robot AI. And it's the AI that matters for Tesla.
Yep.
And it just happens is that we're just so fortunate as Tesla investors that both of these are coming to fruition at the same time. At first, everybody thought FSD robotaxi, because that's all we talked about. And then bot was like this guy dancing, and all of a sudden this clunky thing, and all of a sudden it's like, I think basically at par in terms of their development and almost when they're going to be launched as products.
Mhm.
They're pretty well caught up now, and I think like you're saying, robots may actually surpass it and be faster. So I've been saying this for a couple of years, so I think that that's what's playing out right now. And
Yeah, the other interesting thing too, Herbert, is I think we could have had FSD publicly available earlier than we have. But
mhm.
the problem is when you drive on a road, you're driving with every other vehicle that's human driven,
Yeah,
right? With a bot, you can actually segregate those away from
segregate them.
people.
Yeah,
You couldn't
you're
do
not
that with
allowed.
cars.
Yeah, you're not allowed to have a bot working side by side with humans yet. When I interviewed a number of CEOs of humanoid bot companies, and I asked them the question is, when are you going to be cobot certified? That means that you need to be cobot certified to be able to have a autonomous machine working side by side with humans and make sure they don't kill them and hurt them and harm them. Most of them said about a year, 2 years away from now.
Mhm.
That was like 6 months ago. So it'll take time for that. But like you're saying, they can segregate these and then they
Mhm.
can get them working already. You don't need to wait for the cobot. But in this case, this is what you need: cobot certified for FSD.
Yeah,
You need to have safety
right.
approval from NHTSA and others to be able to sure that you're not going to kill other humans, both pedestrians and drivers, because you're in the wild. You know?
Yeah, and the crazy thing too about the FSD is that we have a lot of automobile deaths on the roads already.
Yeah.
And even FSD, if it's not perfect, if it kills less people, we're
Yeah.
all better off. But we all know that if FSD does start killing people, then
Yeah.
it'll probably get shut down. So the
Yeah.
level
Just
of
odd.
perfection that's required for FSD is way higher. It's a way higher bar than any human.
Yeah.
And that's kind of unfortunate because as a society, we would be better off. Even if FSD wasn't perfect and did occasionally kill somebody, we would all be better off for it.
Mhm.
Um, so that makes the hurdle higher for FSD, I think, than it does for the humanoid bots. I
Okay.
suppose it's possible that of course, there will be accidents where something will happen to a bot and it may harm or even kill a human.
It's going
We
to
should
happen.
expect that will happen too,
Yeah.
and that already happens today in the workplace with
With the
humans.
industrial
Yeah,
and industrial robots too. Yeah.
yeah.
All the time. Okay. Thank you so much, Cern. I appreciate this. I thought that it was important to kind of like reset everybody's minds as you see the stock fall, you see it rise, you see it fall. What matters is the big things. And this is it, right? It's about energy, it's about AI, robots, and Robotaxi. And just keep your eye on those. Are they progressing? And then at some point, they become a business. But when they do, it's massive. Thank you so much. Appreciate you. All the work you do, the research you do, the presentation, you sharing it with the community. We really do appreciate you, Cern. Thank you very much.
Welcome. Thank you, Herbert.
Yeah. Follow Cern at X, Cern Basher. Subscribe to his account as well, actually, on X. Thanks, everybody. Bye bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.